exchange. Well, the rand's slump has been attributed to global as well as domestic factors, and with these unlikely to abate anytime soon, the currency is expected to remain weak in the coming months. Joining us for a look at the rand, labour instability and investor sentiment as a whole right now is Chris Hart. He's Chief Strategist at Investment Solutions. Chris, thanks so much for joining us this morning. We've got the local unit seeing a spike of weakness come to the fore yet again. We're back above that key psychological level of 10 to the dollar. I mean, how much at this stage of the game do psychological barriers mean at this stage?
Yeah, I don't think worry about that. I think when one looks at the overall fundamentals, there's internal factors, there's external factors that we need to be concentrating on. We need to appreciate that many emerging market currencies are under pressure at the moment. It's not just the rand.
Having said that, though, we've got to put up there that emerging market currencies have weakened by 6% over the past month. In relation, we've had the local unit depreciating 12%.
Exactly. So we're certainly winning the race, and we're winning the race at a time you've got escalating quantitative easing in the developed world. And that's interesting because it should be the other way around. And I think there's a tussle, if you like. There is no growth and there's no yield, and sovereigns have got solvency problems in places like Europe, etc. Largely emerging markets, if you just look at the surface of things, looking better. But I think we have also been, going through a period of risk on. Okay, and that means the rand should have been strengthening during that time, not weakening. And that's why I think over the next, say, call it next 2, maybe 3 months maximum, I think that the rand could struggle a little bit more. For now, the reason that I think we might go into a risk-off period. The stock markets just look like they're a bit uncomfortable at the moment. They've been rising enormously for the last 7-8 months, and I think just a month or two of what then we'd say is risk-off could propel the rand quite a bit weaker.
Having said that, Chris, we've got local factors to take into consideration along with the global factors. I mean, what's winning that tussle in your books right now?
Well, the local factors are winning at this stage, unfortunately, because firstly, the macro imbalances are huge. The current account deficit is enormous, and we've got a government budget deficit. So that's a twin deficit problem, and we're not going into any issues there. It means that our savings rate is too low, which is why we've got this enormous current account deficit. And then you've got the labour unrest. So when you look at the actual growth patterns, slowing growth, widening current account deficit, that's just wrong. It should be the widening current account deficit should be associated with a boom, not a slowdown. The strikes, not a great compliment, and so we are however, I think we are starting to see the connection being made to what I call this labour unrest and union unrest, if you like, and the weaker currency. And I think that's a good connection to make, that the high petrol prices we can now attribute to a large portion to that. Not entirely, I think that would be wrong. It's also wrong just to attribute it to a single speech the president made. That's also wrong, because it's a lot broader and a lot deeper than that. So what do we need to turn it around? We need to start getting investment confidence back. Right, that investment inflows will help to stabilise the rand. We also then need to get our production up. Mining production, as far as it can make out, is, if you look at the mining index, is at a 35-year low.
And that's exactly it, Chris. I mean, we know what we need. Where are your confidence levels sitting in terms of us being able to achieve it?
No, we have to, I think, because, if can I use the term loony left, right, as being exposed for what it is, all right, you are starting to see, I think, an awakening amongst policymakers that, whoa, hell, we can't carry on this way. We actually have to stop the strikes. We have to get mining production back. You can't have product price falling and production falling, you just have a double whammy on the actual cost. We have to get our savings up and we have to get our growth rate up. If we don't do that, we're going to actually be going into next year's election.
Especially where you could be using this weaker currency to enhance your competitiveness on the global scale, and we're doing very little to get that right.
Well, the only way you can use a weaker currency really to work is if you're raising productivity as well, but we're not doing that. We don't have a productivity-driven mindset, which and if you did, you wouldn't need a weaker currency anyway. But if you've got the weaker currency, the only real leverage you could have is a rise in productivity, because if you don't, all you'll get is inflation. And that's South Africa's experience in the last 30 years, is the only so-called benefit we've got from a weaker currency is inflation.
So on that note then, what's your outlook for the inflationary scenario?
Well, the inflation rate, I think we're looking at something that will go above the 6% level in the next 2 or 3 months and stay there for some time. It may rise as high as 7% if the rand weakens to as much, as above 11 or even reaches 12, which I think is a possibility, over the next, say, 2 or 3 months before we start to see it stabilize and recover. If I were to say within the year, we're back below 10, and that's in the recovery phase, but we have to actually see steps being taken to stabilise the rule of law. As I say, the right to strike, I think, is great, but the right to work must also be there. In the labour reform laws, you have to have balloting as well. You can't have the union leadership saying this is, be acting as dictators and say we've earned the right to strike, we will now go on strike. We actually have to have that balloting so that the actual members can decide whether they want to go on strike or not.
Yeah.
I think that's important because, as I say, the right to work is being, ridden roughshod. It's almost as if the right to strike is the most important right we've got, over and above the right to property or life or anything like that, and that is a big concern. And investors see that, and people look at this and say, what's going on? South Africa needs to re-establish its rightful place on the continent as well, because as we increasingly look inwards and fractures, etc., the rest of the continent is actually starting to prance away from South Africa. And South Africa's preeminent role is not our birthright or anything. We've got to work hard and earn it. And one of them is to actually maintain a growing economy.
Absolutely.